Okay, this is Jay with Icon Systems again. You guys should be able to see my screen with the disclaimer about the accounting advice. I'm just going to keep that up until we start the webinar. For the people that have joined since my last announcement, it'll be about 1 more minute until we start, but please look at your email. You should have received the Getting Started Accounting Guide and also the today's scenario that I'm going to use to set up an accounting system from scratch. There'll be no numbers in this accounting system. It would be basically just like you would have received the database once you've been one of our clients for the first day, basically. Okay. So again, it's going to have no numbers in it. I'll show that right in the beginning. I'll run a balance sheet to show that there's no numbers in the system, and then I'm going to use that scenario that I had in the email to set it up. And I'll be using the Fund Accounting Setup Guide as a guide to doing those items. I will let you know I probably won't go in order of the guide, but I would probably recommend printing that off and making your own notes on it as well if you haven't already done so. So again, we're going to go ahead and get started. Again, there's a disclaimer there. I'll leave that there for a couple more seconds, and we're going to go ahead and start the webinar. Okay, and then I'll take questions at the end of the webinar. Okay. Just to show you that the system is zeroed out, so to speak, I will go ahead and run a balance sheet report for the year 2020, just to make sure I capture everything. You'll see that there is 0 numbers in here. This is exactly the way you would receive the database from us once you become a client. You would have no numbers in the system. Okay, so I'm going to go ahead and I'm going to start setting this up based on today's scenario. If you have that printout in front of you, you will see that there's a bunch of items for the funds, but I'm actually going to jump down into where you see the uncleared check area, the invoices, and the AR invoices. The reason is because I'm going to attempt to set this up, and I'm going to tackle the easy things first. For example, putting in vendors like the groundskeeper, the AT&T, and the Pizza Palace. I'm also going to put in the daycare, the Family One, it's called, unit that's paying for daycare services. And I'm going to put in the mortgage company as well, that we're going to be paying a mortgage later in the webinar. So I'm going to put these in. These are kind of the easy part of the system as far as putting in vendors and so forth. And we'll go from there, and then we'll tackle the beginning balances at the top of that sheet. Okay? So the first thing I'm going to do is I'm going to go to the general ledger when I come in, and I'm going to go to the chart of accounts. And when I go there, you'll actually see the first time when you come in, would you like the system to set up its own chart of accounts? We do have a sample chart of accounts out there for you. And it's pretty, should I say, pretty good for a church to have that sample chart of accounts. Obviously, it can be changed from what we give you, but I can tell you right now it's pretty standard. Okay, so I'm just going to say, okay, go ahead and set it up for me, and you'll see that now I have a bunch of items. I'm going to make a few changes here, things that I didn't like on the sample chart. For example, I don't like this note payable. I don't like the word fund in my chart of accounts, because fund confuses people when it's in the chart of accounts. Okay, funds are funds, accounts are accounts. They are separate. Okay, so, and I can explain that in more detail if needed. But I would recommend, again, if you need some help on understanding that, is go to the Getting Started Guide, read the Fund Accounting Setup Guide, or we also have out on our website, just to break off in a little bit of a tangent here, under the Church Guide link, there is a Fund Accounting for Church Leadership. I recommend reading this ebook. Okay, I would for all your church leadership, financial secretaries, treasurers, anybody that deals with the accounting books for the church should be reading that ebook. Okay, so now back to the chart of accounts. I remove the word fund from here. I also need a couple of accounts in here. For example, how am I going to write something for the mortgage company when I don't have a mortgage expense account? Okay, so that's not in the system. So I'm going to add a new account, And the add new account works from top down. So I'm going to change this top box to an expenditure. And you'll notice that now the next drop-down box is either operating or other expenses. This is an operating expense. And I don't want the mortgage account to be a sub-account of everything. So I want it to be a primary account. Okay? That means that I would select not a sub-account. If I did want it to be a sub-account, I would select the account that I want it to fall under in this drop-down box. Okay? And then I would click Save. Now I have mortgage expense in there. Okay? And I believe that's the only things I need to change on the chart of accounts. A few things I want to mention, though, while we're here. One is that I see a lot of churches have numerous checkbooks, or they have sub-accounts of checkbooks. Although the system allows that, I would highly recommend that your checking accounts in here reflect your physical checking accounts at the bank. So in other words, if you don't have 10 checking accounts at the bank, you should not have 10 checking accounts on IconCMO. It should represent the actual physical checkbooks. If you're breaking your checkbook out, more than likely you are not using the system as a fund account-based system. Okay. The next thing I would mention is if you have any type of savings accounts, money markets, things like that, and you have transactions that go in and out of that at any time, I would recommend actually making them as a bank checking. Okay, as far as the category detail, do not make them like this, banking and money market. The reason is these here do not have a subsidiary ledger underneath them. Checking accounts do. In other words, you can reconcile a checkbook, okay, because it has that ledger. Basically, a subsidiary ledger is a separate ledger that accounts for the transactions in it. The savings account types and money markets do not have that. So, for example, what I'm going to do here is I'm just going to show you of how I would set up the system if I had a savings account. I would go to Add New Account. I would choose Assets because a savings account is an asset. However, I would call it a bank checking, not a savings here. I would call it a checking, and I would name it Savings Account. Okay? And I would click Save, and if I close that, you will now see that these are bank checking. However, when you run a report, it will say Savings Account. People do not need to know that it's a category detail in here under the category detail. Okay, this does not come out on reports. This name is what comes out on reports, the one in blue. Okay, so and then I would come in here and I would actually delete these other ones. Okay, I will let you know that deleting an account before it has activity is as easy as clicking that button. Once it has activity, it is near impossible. You would have to inactivate it or try to move the activity to a different account. Which brings me to my another number 3 item. You cannot move items from a savings account that was set up as a savings account into checking. Why can't you do that? Well, the reason is because the savings account does not have the detail that's needed for the checking ledger, that subsidiary ledger that's needed. So you can't just move the transactions in those. With expense accounts, you can pretty easily. Those you can move from one account into another account and then delete the remaining account. But when it comes to checking and stuff, there's a lot more detail that's needed for those ledgers. Kind of think of it back in the day when they used to do paper ledgers for everything. You always had a checking ledger, you had an AR ledger, you had an AP ledger, and then you had the main ledger. Think of the system in that fashion. That's how all accounting systems actually work. But because everything's electronic now, sometimes we forget that there are ledgers that run all this stuff in the background. Okay, so that's how I would set it up for a checking and savings account if this church only had one physical checking account and one physical savings account at the bank. Okay, I showed you how to set up the mortgage liability as well, and I removed that word fund out of the asset account. So I think we're set for the chart of accounts. Okay, I have not put any numbers in. So now, once the chart of accounts is done, I'm going to go over to my AP area, and I'm going to add in some vendors. Everybody probably has vendors that they deal with every day, right? So this is one of those easy things on the fund accounting setup guide. Look at the table of contents, and you'll see entering vendors in, you can go to that area. If we bring that guide up right here and just go up to the table of contents, entering vendors is under 1.7 in the guide, okay? So I'm going to enter 4 vendors, and then we'll move on, okay? These are the vendors that I'm going to use later. And it would help if I actually type things right. There we go. Okay, and I would put this to probably AP discounts taken, save as that default. I also suggest that you track 1099s on everyone, okay? The reason is because you don't really know how much money you're going to pay that person at the beginning of the year. Well, it's a little late if come November you're like, oh, I paid more than $600 some, but I don't have the 1099 link turned on. When you have the 1099 link turned on, that means we are putting extra information into the database for you to produce those 1099s. So I recommend tracking 1099s on all your vendors, even if you pay them $30, okay? Because you never know when that may increase, okay? So I'm going to put my other remaining people in here. AT&T is one of my vendors according to my scenario. Okay, and I'm again going to check AP discounts, save as a default, and then I'm going to save that vendor. Then I'm going to go and put in Pizza Palace. And AP discounts, more than likely you probably don't get a lot of discounts on your vendors. I'm going to put in my mortgage company because obviously I have to pay them for my church building. And I'll show you that in a few minutes on that. Okay. Okay. Save as default and save. Now, I have not put any numbers in yet. I'm just kind of setting the system up. Okay. Now, I also have, according to my scenario, I also run a daycare. I know some churches run daycares, and I figured that was a pretty good scenario. So I'm going to go to my customer list, and my customer lists are my families, and I'm just going to call it Family 1. You know, the people that are bringing their children to the church for daycare. I'm going to set this up for Family 1, so I can bill those people for the services that the church is providing. Okay. And I'm just going to address 1 is required. There we go. And so now I have 1 customer in there, and you would do this for any customers that you bill, any services that you bill out for, products and so forth. Now, in AR, I also have items, okay? So for example, to produce an invoice, I'm going to charge for a service called full-time daycare, and it's a unit of measure of each, and it's not taxable. And the revenues are going to actually go under program fees, and it's going to be $750 for that monthly revenue, okay? Now, since we're talking about AR, AP, and so forth, this is a good time to talk about whether or not your church is cash or accrual based. I see a lot of churches setting up things on the accrual based side of the system. In other words, accrual based is typically the AP area, okay? This area right here. The reason is because they can do checks out of it. Here's the issue though. If you are not an accrual-based system based on your bylaws, you're doing your accounting incorrectly, okay? So what you should be doing is if you are a cash-based system, you should be doing your check writing under banking. Cash-based simply means that you write the checks out whenever you're ready to pay them. You're not putting them into the system when you receive them. You're writing a check out when you are actually writing the check out to pay. So let me explain the big difference here. In an AP scenario, an accrual-based scenario, when invoice comes in, that day you put it into the system, but you don't necessarily pay for it. You put it into the system and say, well, I'm going to pay it later, okay? And then say a week and a half later, you say, okay, I'm going to sit down and pay everybody now. Then you go into the AP area and pay everybody. Okay. Now the cash-based part of it is this: is if you do cash-based accounting, you basically put the bills on your desk somewhere, okay, and you just know that you have to pay them at some time. And then all of a sudden, when you decide to go and pay them, you just open up your accounting system and you go into bank and check writing, and pay them right there on the spot. The process is entirely different on how it works on an accounting system. The accrual-based system will actually put the money into a liability account that you owe that money to somebody, okay? So therefore, a liability account gets hit and an expenditure account gets hit. The money doesn't leave the checkbook right away. When that week and a half passes and you decide to finally pay off your liabilities through the accounts payable, then the checkbook gets hit. In a cash-based accounting, the checkbook gets hit the day you write the check out and the expenditure gets hit. It bypasses the liability completely. Okay, the process of how that accounting works is totally different between those two scenarios. I would probably bet 90% of the churches are on cash-based accounting. Okay, you are not using accrual-based accounting. You're a cash-based system or organization, and obviously you can figure out from your bylaws what that is. But if it's not in your bylaws, you guys need to kind of make a decision on that. There are pros and cons to each one. I'll leave you guys up to Googling that if you need to. But there are obviously ramifications and pros to both ways. Okay, so I'll kind of let you guys decide that. I'm going to show both in the system today. And you can have kind of a hybrid system that way where maybe some of your big bills will go through AP so you don't forget about them, but your little day-to-day stuff doesn't. But all that stuff should be explained in your bylaws. Okay. Now, I have entered all the things in here that I need to basically do my uncleared items that you see in my scenario. What I'm going to do now is I'm going to run one more balance sheet just to show that I do not have any numbers in here yet. Okay, yeah, I'll take this out quite a few years, and I'm going to say all funds. And you'll see I still have 0 in my system. Now I'm going to go to my general ledger fund maintenance window. Okay, and I'm going to start setting up beginning balances. I'm going to select the general fund. We set that up for you on the system as far as the name of the fund, because that's a required fund. But now I got to put balances in it. According to my scenario, I have $7,000 in my checking, and that's all I have. If you look at the top of the scenario sheet that I emailed earlier today, and it has $7,000 for the general fund in the checking. When there's $7,000 in the checking and there's no liabilities, then the net revenue is $7,000. I have a formula there right underneath the totals. It says net assets. It says all assets minus all liabilities equals net assets. Well, here's the net assets for the general fund. It says net assets general fund. I have 7,000. I minus 0 because I put no money into the liabilities. So therefore, 7,000 minus 0 is 7,000. This is the one line that you set up to make the fund equal on both sides. This is the only time you can affect the net asset of a fund is in this beginning balance setup. So I'm going to click Save Beginning Balances, and you'll notice that I'm doing it as of 12/30/2014. Very important that I set the beginning balance up on 12/30/2014. The reason I say that is if you go to your Getting Started Guide, the Getting Started Guide, it says Summarize Instructions in Free eBook. In here, it talks about those dates and why they're important to set up the beginning balances. The reason you don't do it for 12/31 is we want 1 day remaining in the previous year to put any transactions in that we need as far as unclear checks, any correcting entries, and so forth. So the beginning balances should be the very first thing that gets hit. Okay, then 12/31, any transactions that we need to make our books correct. In other words, unclear checks, things that we've written out, things that we're counting on coming in, so forth, that need to roll into the new year. Okay, so that's why you don't do the beginning balances on 12/31. You always do them the day prior. Okay, and that's what this summarized section goes through. Actually, this summarized section is this entire church accounting ebook, or this church accounting setup guide, kind of summarizes everything in these steps right here. However, I would recommend you still read through the entire book. Okay, for the setup. Okay. Now I click the Save Beginning Balances. It says 12/30 there. Good. and it says beginning balance applied successfully. Now I'm going to add in some other funds. You'll notice that I have a youth fund in there. Okay, I'm going to add that one in, and I'm going to choose it, and you'll notice the youth fund has $500 in the checkbook. Okay, and it has no liabilities according to my scenario, so I'm just going to put 500 in the net asset and click Save Beginning Balances. Now I'm going to put in a building fund. Now the building fund has a few things going on in it. Okay, the building fund it's holding the mortgage, it's holding the asset liability, and it's holding the actual mortgage. And I recommend that if you're going to have a mortgage or something where you're going to be writing things out, they should be set up under the fund. So the mortgage itself and the asset needs to be set up under the same fund. So the checking account has $1,000. However, the building, how much the building was paid for. Accounting always goes by what was paid for, not what it's worth. Okay, we get a lot of churches asking, how do we put more money into the system to appreciate the building? You can't do that in accounting. Accounting goes by cost. Okay, you can't just keep on increasing your building value, because a building value is an opinion. It is not what it's sold for. Okay, so a building, what it cost this church when they bought it was $500,000. Okay, so I put it under a building asset account. Then I would scroll down into the liabilities, because I am not done paying that loan off. I still owe $400,000 according to my scenario. Therefore, my net asset for building is $101,000. If you take all the assets, okay, 1,000 plus 500,000 minus 400,000, you will get $101,000. That's what that fund is worth at this point in time. Save beginning balances, 1230, good to go. At this point, I've set up my beginning balances. Okay, all I have to deal with now is my unclear checks. However, I do want to look at the report now to see what it looks like. So if I run my balance sheet as of 12/30, I can click Show Report. Here is my checking, $8,500. That looks good, because if I add in all my items for every fund, 1,000, 500, and 7,000, I come to $8,500 as illustrated on my scenario. Buildings, I have a $500,000 building as a fixed asset. That looks right. I have a $400,000 loan. That looks correct as well. And here is my check, or here is my funds broken down by fund, how much in each one. Keeping in mind that this one, majority of it is a fixed asset. It is not money. Okay, and then this is my total net assets for the entire organization. Okay, and this is my total liabilities and net assets. So in other words, if I had this all paid off, I would actually have $508,500 in the report, or in the organization. Okay, so $508,500 I would have if everything was paid off and no liabilities. That's how much my organization would have as an asset. Okay, but unfortunately, I have this big liability out here called $400,000. Okay. Now that I agree with the balance sheet, now I can put in my uncleared items, but I want to put them in as 12/31. Remember, I said we've set beginning balances at 12/30. Then 12/31 is when I set up my unclear stuff. So first, I'm going to go to banking, check writing, and the reason I set all those vendors up initially was because I wanted to be able to select them here. So my first uncleared check is groundskeeper. Okay, keep in mind I'm backdating this to 12/31/2014, and it's going to be $50, and it's going to be for cutting grass. Okay, and it's going to be some type of building maintenance, and the general fund is going to pay for that. Add distribution, post and print check. Here's my check. I could just shut that down because I've already paid them. I'm just putting in uncleared items right now. My next one is AT&T, 12/31. Make sure that date stays there. 75. Phone. I'm going to choose an expenditure of telephone. This fund is very important to make sure it's right. I'm going to say general fund. You'll notice that's on my scenario, what fund paid for everything. Okay. And then my last thing is the Pizza Palace, and that was for $20. I kind of wish pizza was that inexpensive, but it's not. Pizza for youth. And this was a youth type of thing. And I'm just going to put it under an expenditure called meals. But the youth fund paid for that. Okay, I'm going to post and print a check, and I'm done putting unclear checks in. That is how you do cash-based accounting, by putting the checks in, and you print the checks right away, and those expenditures are hit right then and there. Okay, so that's cash-based accounting. Now I'm going to kind of flip things around a little bit. I'm going to do an AP invoice for the mortgage company. This will be an accrual thing. It's going to sit in the liabilities until I'm ready to pay it, more than likely in the next year, because I'm setting up things that came in December, but I haven't paid them under the AP scenario. So I'm going to go to AP. I'm going to go to Enter Bills. I'm going to select the mortgage company. The AP area and the checking actually uses the same list of vendors. That's why you go to the AP area to set up your vendors, even if you're a cash-based accounting system. Okay. Memo is mortgage. You put whatever reference number in there, but you got to make sure that it's 12/31/2014, and the amount is $2,000. Now, mortgages are treated a little bit differently, because if you look at your bill, you probably pay so much in interest and so much in principal. So they need to be actually split up a little bit. Your mortgage expense, okay, is going to be the interest part. So that's going to be, whoops, I have in my scenario $500 for that. And it's actually the building fund that's going to pay for that. And then I would actually change this to an asset and go down to buildings, or excuse me, I will go to liabilities and go down to notes payable, and I would do a $1,500 debit to take the principal down. The principal resides in the liability, so if I'm giving them money, my liability should go down. Okay, the bank obviously makes some money, which is the $500, because they loaned you the money. So the part where what they make every month is the mortgage expense. What you remove or take down in liabilities is the note payable in the liability section, or the principal. And I would post this transaction, and it says posting complete. Now I'm going to do an AR invoice also for the family for daycare. And I'm going to look up family number 1 and make sure that both of these dates are 12/31/2014. And then I would add full-time daycare, add that item, and accounting memo is daycare December. Again, the general fund is going to do that. Okay. In other words, the general fund receives that money, and then I would click the print invoice just to look at it, make sure it's right, make sure it's 12/31, and then post invoice, and that's posted. Now, if I look at my balance sheet, I should see some things in there as of 12/31. If I go to General Ledger, GL Reports, and I run a balance sheet for 12/31 for all funds, you'll see that if I take 8,500, and I'm just going to bring up a calculator here just to kind of prove my scenario out. I had 8,500 to start with in my checkbook. However, I minus 50, minus 75, and I minus 20 for the Pizza Palace, the AT&T, and Groundkeepers unclear checks, therefore giving me a balance of $8,355. That agrees. I also put in an accounts receivable of $750 for daycare. That's right. The building is sitting at $500,000. That did not change. Okay. Then down in my liability section, I have a $2,000 liability sitting out here. Okay. And then I also have a long-term liability of $398,500. The reason that dropped from $400,000 is, remember, we did an AP invoice of $1,500. So if I minus $1,500 from here, it's $398,500 because that's the principal amount for that AP invoice. The $500 expense is shown up on the actual statement of activities because the expense is taken out right away. Okay, so my principal dropped by $1,500. Therefore, my total liabilities is $400,500. And then here's a breakout. Keeping in mind that the building fund, again, has that large fixed asset in it, and then I have a general fund and a youth fund. Okay, that's what the amounts would be after all those transactions. Now, here's the thing. Keep in mind that the accounts payable was $2,000 to pay the mortgage, but let's run the balance sheet for the building fund only for the same date. Notice the building fund does not have that $88,355. It only has $1,000, but it has to pay out $2,000 for the mortgage. This should tell the church right away, you are going to have problems. You do not have enough money to cover this. Therefore, you would have to do a fund transfer or figure out how to get more money into this fund. Okay, that's the power of IconCMO, is you're able to break those funds down individually by each report now. Okay, so that would be an early warning right there that tells you you don't have enough money to pay something. You got a liability sitting out here that's got to be paid sometime in 2015, but you only have $1,000 in the checkbook. That's a bad scenario. Okay. So we'll close that, and let me just look at my other things. We'll close the other balance sheet as well. Okay. Now we have basically set up the accounting system in about 30 minutes. That is how you set it up, and I don't know if there's going to be anything else. Oh, I wanted to show one more thing. The statement of activities should have that expense on there, just to kind of show you. Here is the $750 that's actually coming in on revenues eventually, okay? And here's that $500 right there, okay? And then you can also see the $50 for the general building, the telephone, and the meals for the Pizza Palace. So those were the expenses that happened in 2014. Now, if I run a balance sheet, say for 01/01/2015, all those numbers, provided I don't do any other changes, are going to come forward on the balance sheet. Notice the $8350, the $750, the $500,000, again the $2,000, you haven't paid that yet, the $398,500, and then the breakout of the funds, because I did not do anything yet in 2015. All I was doing in 2014 was setting up beginning balances and uncleared items or other things that are coming through that have not been accounted for. Okay. Now I'll kind of open it up for questions. I didn't say this earlier, but on the GoToWebinar interface, you can type your questions in or chat them in using either one of those boxes. I'll kind of monitor both of them, and I'll go ahead and answer any questions that you may have at this time. Yeah, there's one question. Can you talk about the difference between check writing in banking and doing a check through AP? Yeah, I did cover that, but let me try to break it down a little bit better here. Let me just think how I can do that. Okay. AP, when you enter a bill through here, okay, just move my windows around a little bit, and I select something like Pizza Palace, and say I'm going to do some pizza, and the invoice date I'm going to actually put into the new year, so let's just say 01/15/2015. That way I don't mess up my numbers for, oops, I got to actually change my year around, hold on. I don't want, in case there's questions on the beginning balance area, I don't want to mess my numbers up. Okay, so in 01/15/2015, and let's just say it's $51, and the youth fund's going to pay that. Add the window. Okay, so I'm going to post, when I post this transaction, here's the credit and the debit. If you want to write this down, it probably would make it easier to understand. The debit is going to be the expenditure, okay? the credit is going to a liability, okay, because you're an AP, okay. Therefore, when you have not hit the checkbook, okay, you have not written any checks out. All you're doing is you're saying, I realize this expenditure at this time. I will put it in my liabilities for payment later, okay. Now, when I post this transaction, the statement of activities will show that that item came in on the statement of activities. Okay. If I run a statement of activities for the whole month of January and say show report, that $51 is realized right away. However, my checkbook, if I run a balance sheet, remember that $8,355? The checking has not moved at all. However, notice the liability is down in the accounts payable. Remember, that used to be $2,000, now it's $2,051. Okay, so the liability is realized and the expenditure. Those are the two credit and debits. Now, when you go and pay that liability, I come into accounts payable and I say pay bills. Notice I have two things in here. Let me just pay this one off, and I'm going to put this as of, say, February. Okay, because that's when it was due. Post payments. Okay, and then I can print checks if I want. What I just did was I realized the expenditure in January, but I paid it in February. Okay, so if I actually run a balance sheet in January, you will not see that $51 being used yet. If I go back to General Ledger, GL Reports, and go to a balance sheet and run a balance sheet for 01/01/2000, or actually we'll go all the way to the end of January 2015, I'm still going to see the $8,355. I haven't paid it yet. It's still sitting down here in the liability. Okay. If I run the same report, say for February, okay, now you see the $51 come out. That's the difference. If you were doing it in banking, that $51 would have came out in January instantly. It would have been between the checkbook and the expenditure. That would be in the check and the debit, or the credit and the debit. Okay. There's a lot of pros and cons to that. I would actually recommend people going to Accounting Coach website, and you can actually search for difference of accrual and cash base. They also have some nonprofit stuff out here that's pretty good right here. And this Accounting Coach will actually go through the various different things of cash base and accrual base. Okay, so I would actually recommend reading that if you have any other questions. Can you enter a budget and then generate a report showing expenses versus budget? Oh yeah, I didn't even go into budgets. You can put a budget in, for example, and I'll be quite honest, I did a blog series on budgets. If you're only budgeting on expenses, that is not a good thing. So you should be budgeting on quite a few things and using other tools, but that's just a side note. So I can do an expenditure here, and if I do general building maintenance and just say $1,200 for the year, it's going to break it out $100 each time. Okay. Then I can go to GL Reports, budget comparison, all funds, January 2015, and it'll show that I had actually that was charity expense. I should have hit that one first. It would show the actual and then the budget. Okay, I put $100 under the general. I should have put it under the charity expense, but you can see that it can show you the differences. Okay. Please show a fund transfer. Fund transfer, keep in mind, fund transfer will allow you to move money from one fund to the other, to another fund. Keep in mind, though, that this window only works if you're actually moving money from one fund to the other. You can't come in here and move money within the fund to a checkbook. That's just a journal entry. Okay, so this is really moving money from one fund to another and possibly from one asset to another. So I could actually go in and do say a $5,000 transfer, and I'm going to replenish the building fund. And it's going to come from the general fund checking, transfer out, and it's going to go into the building fund, but it's going to stay in the checking and transfer in account, and I can click post. What that does now, if I actually do a GL report, remember that balance sheet that the building fund didn't have enough money in it? If I actually do it for 12/31/2014, or actually no, I'd have to do it. I did it for today, so it'd actually have to be 03/31/2015. Now I will have $6,000 in there because there was $1,000 in there before. I transferred $5,000. Now I have $6,000. I can cover this $2,000 bill, okay? And you can see that I have more money in there. And then the activity window, just to kind of show you that, would actually show for the building fund would show a $5,000 transfer in as well for other financial sources. Okay, if you need to pay a vendor out of more than one account, for example, yeah, you can pay more than one account. Even in banking, you can do that. That's not a big deal. That's just a disbursement. So, you know, let's say the groundkeeper actually does several things around the organization, and say he's getting paid $1,000, various fixes and maintenance. And let's say out of that $1,000, he actually did 250 out of the building fund, and it was actually for fixing the bathroom. And then he also fixed the tractor for another $250, but the general fund owns the tractor, right? Tractor fixed, add distribution, and you know, he also did a repair or renovation, so to speak, on the building for the daycare. Maybe he put the studs up for the walls. Okay, and now I can post and print that check, and you can see all the expenses. He gets $1,000, but you can see the breakdown of hitting all the different expenditures, and believe it or not, I can even hit different funds as well within the same check. That's something that most systems, they can do this part, hit the different expenditure accounts, but they can't hit separate funds, okay, most of the time. So that's how you would do a check like that. AP would work the same way if you do AP. Okay, I don't see any questions, so I'll assume everything's been answered. Obviously, we have tech support, and so give us a call if you have any questions. I hope you guys enjoyed the webinar. You guys are welcome. Thank you for attending the webinar. And so I'll go ahead and end the webinar, and I thank everybody for coming today. Have a great day.